Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with our friends, Massar and Molly Smith. Welcome to our audiences across our Bloomberg platforms. You are always my friend, Carol, no matter how hard I am on you. You know, they told me yesterday I was talking over you and all this. I said, really?
It's like
I went back and looked at the tape, and I said, this is just a normal day for us.
It is a normal day. This is not a normal day, though, in trading, right? I just feel like, again, it's another day where we see almost 2 different days of trends. And here we have the large cap tech names. I'm looking at Microsoft, up about 2%, Amazon, Alphabet, all up about 2%. You know, just when everybody says, forget about big tech, once again, investors coming in and buying on any kind of dip, Molly.
Oh, I was looking at the ones that were dipping today, and this is more in the energy sector. So take a look over at some of the refineries today. I was looking at Phillips 66, at Marathon Petroleum, and Valero Energy. All those dropping today as the EIA data showed that gasoline demand is falling and oil prices also extending their slump on the day.
Yeah, it's really interesting what's been going on with those energy names in particular. You look at the big movers of the day, they were all energy names and those big tech names. It's kind of like an either-or market right now.
Yeah, it is an either or now. And it gets to the question is, are you buying into a fundamental story? Are you buying into a macroeconomic story? Or maybe, I don't know, something that's just completely divorced from all of that. But look at the data that we got this morning, guys. What does that tell you about economic conditions? And what's the setup then as we head into Friday? We got an awful day yesterday, but clawing back some of those losses here on this Wednesday afternoon. So a bit of a reprieve here, to be sure. The Dow Jones Industrial Average looks like it's going to finish out the day higher by more than 100 points, up about 0.4%. The S&P 500, which yesterday was flirting with a break below the 200-day moving average, now trying to create some distance between the two, higher by about 34 points or 0.8%, while the Nasdaq is going to close higher by 1.4%. And let's check in on the Russell 2000 because the cyclical trade had started to gain a little bit of steam. You did not necessarily see that today. The Russell is your relative laggard on the day, only higher by about 0.1%.
All right, so let's dig a little bit deeper, into the S&P 500, and probably looked a lot different certainly earlier today. But right now, Scarlett, you've got almost 377 names to the upside in the S&P 500, 125 to the downside. The S&P 500, which is skimming along that oversold RSI level, as soon as it hits it, it just kicks to the upside. You find buyers coming in.
Yeah, and we close near our highs. It's notable that the last 35 minutes of trading or so, it's pretty much, it feels like it was a straight line up. When you look at the sector breakdown, I mean, just 30 minutes ago, this was pretty mixed. At least at midday, it was definitely flirting with a lot more red. In the end, you have autos and components, software and services, and media entertainment all gaining at least 1.5%. Look at autos, up 5% as a group. And then on the downside, energy stocks lower by more than 3%, telecom stocks, utilities. So you have energy falling with gasoline prices and oil prices, as Molly mentioned earlier, but utilities and telecoms, those are your bond proxies.
It's like everything is awesome, right? Again, I don't know. It's kind of crazy. All right, so let's get to some of the individual gainers in today's session. Check it out, everybody. Tesla, top in the S&P 500 and the Nasdaq 100, up another 6% in today's session. It did trade lower earlier in the week, right? There were some concerns about weak production and delivery numbers. That put some pressure. I really would look for anything kind of specific. The EU is formally launching an anti-subsidies probe into EVs made in China. Does that possibly help or hurt Tesla? I don't know. There's another report noting that Tesla taking its Cybertruck testing to Mexico. Also, it's being seen in Ohio, Florida. So maybe there's some excitement over that. I couldn't find a real catalyst, but nonetheless, investors certainly did, enough so that they were buying into Tesla. And then check out the cruise lines, guys. It wasn't so good yesterday when you had Morgan Stanley cutting price and estimate targets on the big 3 cruise liners. They were under pressure yesterday. Investors coming back in, Shore Capital stockbrokers, analyst Greg Johnson raising the recommendation on Carnival to hold from sell. Carnival up 2.7%. And don't forget, too, those falling oil prices, which is a big cost line on the balance sheet for the big cruise companies. that coming down, maybe helping them. And so you also had, check it out, Norwegian, it was up in today's session. Royal Caribbean up about 3%. Norwegian up almost 4%, Molly, in today's trade. And you're looking at the energy names, right?
I am. So like you said, maybe those is a good sign for the cruise lines, but not so good if you are in the oil business. So today, oil plunged most in more than a year, signs that demand is flagging in this high rate environment as we're really gearing up here for this higher for longer stretch in interest rates. So West Texas Intermediate crude settled below $85 a barrel today. It's the biggest one-day drop since last year. So the bigger decliners today is Valero Energy, Marathon Petroleum, and Phillips 66. All of those down more than 3% on the day.
Let's take a look at what happened in the yield space here, because we talk about that relentless climb higher in yields, actually taking most of the Treasury market into oversold conditions here as that sell-off really looked like it was going to extend for a fifth week. So a bit of a reprieve here on the day as the entire curve shifting lower. Most of the activity on the longer end of the curve with the 2-year down about 10%. And on the longer end, you're seeing a drop of about 6 basis points or so on the 30-year. We should point out, though, overnight, there was a lot of volatility, and that 30-year yield did actually trade above 5% for the first time in quite a few years. And I am curious, guys, about your thoughts here about the direction of yields. It's interesting. We're speaking with Bill Gross a little bit earlier, and he really was hammering home this idea of how the market, the Treasury market, is in oversold conditions, and that, at least on a technical level, might actually provide somewhat of a reprieve. But of course, he's still in that camp that yields are destined to move higher from where they are right now.
They can be oversold for a really long time. It's not clear what the catalyst is for that to correct itself. And of course, it was the jobs-related data that really sparked these big moves yesterday, and of course today. And tomorrow we'll get jobless claims, which a lot of people are saying is the number that they're keyed in on because it's high-frequency data. It comes out on a weekly basis as opposed to a monthly basis.
Yeah, 210,000 is what we're looking for. 204,000 was the previous month, or previous week, excuse me. And I do think it is a market that continues to move, I feel like, in a big way swing in terms of the data points and the data points that really matter to the Federal Reserve. And I think we see that certainly play out. So it'll be interesting to see what we get tomorrow. And then, of course, on Friday with that monthly jobs report, which is old data, backward looking. But nonetheless, it certainly can set a tone in the marketplace.
Yeah, that's definitely going to be the biggest one that we get this week. And of course, so many of us didn't think we were going to get that report this week. Remember, we were bracing for a shutdown not too long ago. So nice little surprise that we will get the payrolls report. Looking for a little bit of a moderation there. But I've been hearing, I don't know if you guys as well, for some more people calling for more the 100,000 level in payrolls gains. And that would really be starting to signal a steeper drop off from where we've been.
All right, well, hold out hope, Molly, because don't forget, we have to go through this whole budget debacle one more time in November. So it's possible we could get a shutdown. No, they're going to figure it out, Romaine. They're going to figure it out over the weekend, and it's going to be smooth sailing. Yeah, don't get me
sarcasm.
riled up here, Carol. On that point, though, I thought it was interesting because there was a lot of questions. I know we posed a lot of questions to our guests here about the impact on government finances from this debacle and just the overall dysfunction. And Fitch Ratings actually did come out and kind of make it clear that the downgrade they did earlier already sort of takes into account all the mess that we're in right now, basically saying that the reasons why they downgraded were exactly the reasons why we ended up with McCarthy being booted out, which is that, quite frankly, you do have a dysfunctional Congress, and at least in the House, a Congress that is kind of beholden right now to a very small minority of members who just kind of want to see the world burn.
You know, Brad Jacobs, who you guys also had on, executive chair over at XPO. I love logistics. I love trucking. It tells us so much.
We had him on first.
No, okay, but we did it better. But anyway, well, he had such a great perspective kind of on the world. And in terms of Washington, he's like, yeah, we watch it, but so great that we actually have a government, two parties, two different sides. And ultimately, it does function versus, do you go to a country where it's really one leader who just calls all the shots? And he talked specifically about...
yes, we call those aren't democracies, Carol. Can you compare our democracy to other democracies? You're comparing our democracy to a dictatorship?
Well, basically,
this is a glass half full perspective.
I don't know where you're going with this, Carol.
Basically saying that it is much better than a dictatorship, right? That we do actually have some level of functionality.
Okay.
Some level.
Now, I lost my train of thought.
No, I think you can end it there. We have some level of functionality.
No, please let her keep digging.
The other thing that was interesting that he pointed out, that when we look at the economy, he talked about these stimulus programs, whether it's infrastructure spending, these legislative things that actually did get done in Washington. See, it does function occasionally. In that is going to provide a level of liquidity to the economy. And I thought that was an interesting highlight that he brought out.
Yeah. there's that. And then you hear about other investors saying they actually want gridlock. They don't want any new spending plans. They don't want anything being done because the way it is right now makes it predictable. But at the same time, I can't imagine that expectations of paralysis and constant threats of shutdowns or possible defaults is a tailwind for the markets in any way.
Yeah, it kind of makes me wonder, going back to that Fitch downgrade, I mean, what was in their crystal ball then? I mean, I guess it's maybe not so surprising. You look at the 10 months McCarthy had coming into this showdown here, obviously a tumultuous vote to get him into the speaker seat to begin with, the debt ceiling we had back in May. So who knows, maybe this is his little hat trick of sorts.
I feel scarred. I'm just going to tell you, Romaine, I feel scarred.
Don't worry, you're fine.
Yeah.
You got no issues with your Congress people out there in New Jersey, right? They're all squeaky clean.
No comment. All right, we got to run.
We'll leave it at that.
We could talk hours about that off camera.
Why,
All right.
did I touch a nerve?
No,
Oh.
please. It's part of our history, unfortunately. All right, that's a wrap. Our
Just
cross-platform
don't ask me
coverage.
about Chicago.
That's right. Yeah. See, we can talk about that together. Radio, TV, YouTube, and of course Bloomberg Originals. Guys, join us tomorrow. Our conversation will continue.